following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. And we're going to look at the British pound immediately. This is something that this is another good example of how the profiles for me kind of block out one side of the marketplace. I was actually looking to nibble down here 130.19. We've been talking about that. But again, you know, when we start crossing the borders and having closes below these profiles, that's really when it's okay to be short, not okay to be long. So at bare minimum, it's kept me out of trouble as far as trying to nibble on the long side. There's been no reasons to nibble on the long side. We've talked about that. Here's the daily profiles. I think this is the 31-year low right now as we speak. Here's the 240s, kind of, again, okay to be short, not okay to be long on the long term, and then kind of the 240s give you some inflection points to leverage against on entering a trade or playing defense against that trade. And, you know, talking about things in Europe, thank God Jamie Dimon has stepped in and what did he say? Positive comments last night from JP Morgan CEO Jamie Dimon on Deutsche Bank. What does that mean? If they start getting advice from that guy, they will use innovative measures to correct things, I'm sure. That's all I'm going to say. So here's Deutsche Bank, staying in the European theme here. Getting back above 1265. We talked about 1265 and 1366 were the big numbers here. So, you know, you get a close in the profile, tone changing a little bit on the intermediate, and go back and retest that 1265 for a little bit of a trade and bounce. The low was 1260, it looks like. So, again, those are the powerful trades, just kind of waiting for the market to come to you. Not a massive turnaround situation, obviously, but here's the 240s, just to show the shorter term. But, you know, the more powerful trade, again, talking about, you know, the inflection points to pay attention to, 1265 and 1366. We talked about those pre-market yesterday. Here we go. The S&Ps. Let's just kind of take a look at these. This is kind of scary for shorts here, kind of spinning around. If you're wondering what that was the Trump imitation from the debate. Here we go. Anyway. Here we go. 2149, 2150. This is kind of scary for shorts. I mean, the breadth on the scanner, hanging in there, positive territory. Man, I mean, if you're short, I mean, this has just been just par for the course. I mean, you get a break on the short side, and it just gets bid up. I mean, and, you know, Juan and I were talking about the other morning, you know, we had a decent break. I forgot when maybe it was back in here. Was that the Brexit deal? Yeah. And, you know, okay, we're coming up into some inflection points, try to short, boom. All right, it's over. And that's just happened time and time again. I don't have to tell you guys this. That's why when Juan and I were speaking, I was like, well, you know what? There's seemingly been worse news than this, and it just gets bid up again. And, you know, there was a nice market comes to you kind of moment right there. A little bit of a breakout and reversal, but, you know, just it could do it again. I mean, you know, we could launch north again, and doesn't have to make sense. the political scene and the fall seemingly is getting shrugged off, which is kind of just a amazing thing that this market continues to stay up, but it is what it is. We're trading above profiles on the daily, and you've got some areas to play defense, 2150 namely, and it is what it is. So what does that mean for trading stocks in general? We're going to talk about that in a little bit. Here's the crude trade. Got some just insane resistance around 50 and 49.75. Yeah, no kidding. Here we go. You know, Jamie Dimon's stepping into Deutsche Bank too. That a very well-respected guy. Where do you start and where do you end on that? I mean, good Lord. Anyway, let's keep going on the first segment here. We'll go into a rabbit hole later. Okay. All right. So this is a big deal. Gold is now into that area we talked about. That was a buy point before. You know, it's a little concerning. The market's kind of spinning around, staying above inflection points. You've got a chance to pick a battle here in the last couple of minutes? Let me see. Yeah. Last couple of minutes, we've kind of gotten down into that area and pierced it. I think the smart play here literally would possibly be to wait for a daily close back into the profile. But if you're feeling a little daring, and again, you know, a lot of times these numbers are pierced just to do it, just to get people out. 1305.05 on the December contract is at, you know, near-term low. Last time it had been in that area was late June before that, and then this was the September 1st low. Getting the key reversal back into the profile would probably be the smarter play. And again, if you're not in the trade and it bounces, now you don't have to be in every trade all the time, every day, but and you don't have to have positions on all the time. But you're coming down into a support area, and at least you can play defense around this area. Take the medicine if you're wrong, but you know it's a little kind of lower highs and kind of compressing down, and a lot of times that'll have a little flush action. So might want to wait here on gold, even though that is a support area. And you definitely got 1295.96 down below. So if this thing continues to sail after today, that's kind of your support area, and then getting back above 1309, 1310 is going to be your buy point. So down below 1309 to 1295.96 is kind of a no man's land. Not interested in shorting that, letting somebody else figure that out. Okay, so soybeans getting a little, you know, bounce off that 44.45 area, and we're going to talk a little bit about that when we come back and what to do with this animal. Be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. I hope everybody knows and has prepared for this National Taco Day. So, and Lawrence doesn't swim. Chipotle, it's going to be a place to hang out and be all day long. So, enjoy National Taco Day. Here's, we're going to try to have Juan on and talk about, some of the things that are going on in South America, especially relative to the historic events. I think over 50 years. Is it over 50 years that's been going on with the FARC situation down in Colombia? But here's the coal cap. This is the weekly view. Pull back a little bit. I'm showing it in the den right now. So you've got new support down here at 1311. And I hope we can get Juan on today. We're lobbying for it hard right now. Here's the indices profile heat grid. A lot of the indices are positive right now, and the ones that are negative are Shanghai's down here. There's the Colombian Stock Exchange. But let's take a look at the Shanghai really quick. I've been pretty bullish on this, but again, it's kind of like the British pound scenario. We got a little bit too far below. I mean, these profiles have edged up and they've actually kind of tightened up. So, this is one where the volatility's obviously contracted and the profiles have kind of like shown that. But, we want to get back up in above 1315 and especially a weekly close up in there. And then the, breakout we had before, this kind of really upset me when we had broken out and then kind of slumped back into this area. And I'm showing on my screen right now the Shanghai. Want to see this get back at least in the profile. You've got some ETFs that we talked about a couple of weeks ago for the China A shares play is almost a U.S. ADR type thing. And a lot of people overseas, not necessarily in China, that like down in South America, it's way more expensive for them to trade their own stock on the Colombian exchange with a local broker. It's like, 500% more expensive than to go trade a U.S. ADR related to that instrument. So a lot of people, even in foreign countries, trade the U.S. market and the ADRs type situations. You know what I'm talking about. The mimicking type instruments on the U.S. exchanges. It's cheaper. And it's hard to believe, but sometimes there's more liquidity in the arbitrageable instrument on another exchange than the local exchange. What does that tell you? Why do exchanges do that? Maybe Larry can answer that question. Why do they just... It's some of the things that the Board of Trade did. I was just shocked. I was like, so you don't want any business. You don't want people to trade on your exchange. You're trying to make it prohibitive cost-wise. I mean, the Eurex had it licked, man. I mean, Anyway, let's take a look at the dollar. All right, so we've talked about this as kind of long only, block out the short side. We're up into a real serious area here, this POC, the mode of the profile now, at the 96.25.26 area. That's something you got to pay attention to, folks. It's kind of been the, as you can see, going back in time to, 1st of August, this has been the line in the sand as far as the top of the mountain. A weekly close above there is going to be really serious, and I think you could use that support again. But right now, we've been talking about being long this. You've got to take some weight off at this stage. Here's the intermediate daily. I like to look across a couple of time frames. Oh, beans. We were going to talk about that. I'm sorry. Here we go. This is kind of we talked about this reversal the other day, and this could happen on gold. And this is why, if these things do happen, these types of things happen where you kind of reverse and get back in the profile, then you can kind of start levering against that, especially since gold is kind of a long trade only right now in my book. I mean, I'm sure some folks on TFNN, some of the hosts have possibly, been talking about the short side, and there's some points to be made on both sides of the fence. I just feel like on the gold side, that's the leverage is towards the long side right now, but that could get dismantled. It's just crazy, some of the things going on these days. In fact, the vice presidential debate tonight. Is anybody going to watch that? It's amazing that they're probably going to talk about important things like how to make the economy better, talk a little bit about national defense, etc. And the events that folks talk about each other and unimportant things gets 88 million people to watch. It's crazy, isn't it? I mean, they're probably going to talk about important things tonight. Anyway, so beans, putting the stops, below that 944, 945 is a little bit of a contra trade. That's the short-term trade. I still feel like now that we've gotten into 964 and kind of breached it, we reached a high today at 975. We're trading right now 966. That little contra trade's kind of off the table. I'm kind of waiting for a weekly close now. I know it's only Tuesday, but the contra trade thing's done its work, and I'm still liking the short side of this trade. And trading against 964, 965 on the short side is not a bad thing, but a lot of times, if you have a little win, it's okay to kind of get out of the market and not give it back immediately, or have the probability of giving it back immediately. So it's kind of like a wait and see right now. All right, going down the list here, the usual suspects we usually cover. Looking at the where's it at? The coppers of the world. Really been keeping my eye on this one. We reached some targets up top, kind of like the dollar situation. There's that POC on the weekly. Those are the long-term weekly POCs are pretty important. 221.32 coming down into support here around this 217.95 with a little bit of noise. Still looking really good. I think to go back and retest that area at bare minimum and to possibly go higher on the copper trade. All right, guys, we're going to be right back, and we're going to hit some stocks when we get back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show, and we're trying to get Juan Villegas on. I hope we can get him on this break, or this segment, excuse me. Let's take a look at, we're going to talk about some of the things going on in Colombia. Let's take a look at gold. Talked about not really, all the things going on, not really interested in buying that 1309 earlier and waiting for a possibly lower number, mainly 1296. Here's that, it shows it, very close to it right there. And again, gold wasn't it was kind of looking heavy We were talking about around 1309 earlier. So 1296 is the big number, and getting into that area, I'm comfortable with buying that. And I know we've talked about a lot of hosts on TFNN. We're talking about a break in gold, but the good news is we're kind of passing on that one this time and waiting for a lower number to scoop it up. And I really feel like it's a decent place to play defense around this 1296 area, 1295. And, you got to give yourself a little bit of noise room around these major inflection points, major being long-term, ultra long-term. So that's where we're at on gold. And we talked about, the dollar getting up into this area. This is obviously affecting gold a little bit, like somebody in the den's kind of alluding to, I think. That POC, if you're catching the show late, around 96.26, that's been hit. You got to be willing to take some weight off on the long side. And we've been kind of blocking out the short side on gold for a long time. Now it's kind of a wait and see. If you want to keep a contract or two on just to kind of remind yourself what side of the fence you're supposed to be on, that's okay too. But it's time to lighten up on the dollar. And it's interesting how the dollar's kind of coming up into some resistance and gold's kind of coming into support. So that's kind of where we're at. And I think we're honored to have Juan Villegas finally here. Juan, are you there?
Yes, I'm here.
How are you doing today, buddy?
It's okay. I was just in the middle of a kind of a hectic morning, but I'm okay.
Good. I'm glad you're okay. Hey, listen, there's a lot of historic things going on in your neck of the woods down there. Can you give us a little insight?
Well, okay.
In 10 minutes?
Absolutely. Well, we've been discussing this peace treatment agreement with the FARC, which has been the longest. We've been fighting with those guys for 50 years, 50. And finally, we reached an agreement a month ago. And last Sunday, we had a referendum to approve the agreements. And 51% of the people said no, and 49% of the people said yes.
So what does that mean? How do you solve that?
That means that we, well, to tell you the truth, we are in the middle of a big mess because the guerrillas are saying that the agreement was signed and it's already deposited in Berna in I don't know what kind of international agreement stuff that works in Switzerland. But the problem right now is that the government has no tools to implement the agreement because they need to win the referendum in order for the agreement to take place. So we're like in the limbo right now.
How did the agreement get signed in another country before it was validated? I mean, who
it was signed in
arranged?
Colombia, though. It was discussed in Cuba for 4 years. It was signed in Colombia. It was discussed in Cuba. But the problem right now is that the President Santos was very democratic in his view, and he wanted to get the agreement approved by the people, and that didn't happen. So right now we're in square, like back to zero. It's very complicated. I don't even know what's going on, to tell you the truth, because everyone is confused, and the opposition is saying that we need to discuss some points in that agreement that are, that, like justice and a lot of stuff needs to be renegotiated. And the guerrillas are saying, no, we're not. We already signed the agreement. That's it.
Right. Well,
so it's a big mess.
Is that kind of unsettling for the markets down there in general, or am I?
Not quite. The coal cap, which is the index, the stock index, just went down 3%. US dollar
right now.
Yeah, it's not. Yeah, there you go. But no, not a big effect, and the dollar is just there.
Where's the peso right now? The Colombian peso, if you don't mind me asking.
2,800, 2,850.
Man, last time I saw you down there it was like 33 or 3,400.
It was.
That was crazy. I mean, crazy good for me.
For you.
Well,
I know. So it's a big mess, but we'll get through this. We'll get through this.
Well, listen, I'm actually sitting on a spring ready to go back down there, and Tom wants to come down there too, if that's okay.
Get down here as soon as possible before this company collapses. I'm just kidding.
Well, we got a lot to talk about when I get down there, but I just want to let the folks know that Juan is an incredible person in general. He's a concert pianist on top of everything else, and he's there's some great places that we went to together, and he's some of the high Andean rainforest type things we went up. That's just
landed. You like that? You like, like that
God.
place?
Oh my God! It's just
We should do a program from there with Tom and all the people.
I think that's the plan. So we're going to map it out today. We're going to have a couple of meetings today about that.
Absolutely.
Listen, a couple other things I wanted to ask your opinion on. Gold is sitting right at, I'm showing it on my screen, at some weekly unfair lows right now, just right in the 1296 area. Is this a trade and bounce thing, or you think gold's just kind of going to give it up and just kind of fall apart here, and there's no reason to be long gold? Or what are your trading concepts here, if you don't mind?
Yeah, I think we have visited this area 3 times in the past. This is the 3rd time we visit that support area, and if we break that thing, we're going to go down. We have nothing to the left, as you know. We look to the left to see what's happening there.
Yeah,
we can go down, really. Yeah, we can really go down on gold if we break below that area. So I'm not very bullish on gold.
I'm kind of partial to a trade and bounce here, but if it doesn't act right and kind of like really want to get away from this inflection point, you and I talk about that all the time. These things have to get away. It could be very short lived, but we're right there right now.
Absolutely.
What do you think about oil? Is that something that I know you?
I trade that thing day in and out, so I know that animal, and I love it. I think oil has the potential. You mean WTI 51?
Yeah. The November contract actually.
Yeah, I think we're going to visit 50 and then 51. 51 is going to be my target. 51.34.
Awesome. Hey, can you stay on? Is that possible?
Absolutely.
Great. We'll be right back with Juan Villegas out of Medellin, Colombia.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, guys. Welcome back to the show. We've got Juan Villegas from down in Medellin, Colombia on with us today. We're so honored to have you on.
I'm so happy that you now pronounce Medellin the right way in my
Well, people look at it, especially here, Medellin, and Medellin is definitely the way to say it. And if you say it the other way, people down there know where you're from.
Right.
Okay, so can I ask you a couple of opinions on some stocks here?
Absolutely.
Okay. And man, I was looking at the flights down there out of Fort Lauderdale. People don't realize how easy it is to get down there now. Direct flights from Fort
flight, $150 per. It's a $300 ticket.
Dude, I found one for $79 on Spirit one way, and then coming back, I think it was like $130. So you can get down there and back for a little over $200, and just one of the best things you've ever done.
You know what we should do?
Life.
We should have like a seminar in the country house.
Oh God!
Seminar on the country house. So let's see how many people in the Tiger then will like to come down here.
Oh my God!
We'll show pictures next time.
Yeah, I'll show some pictures. Maybe even today. I think I've got them. I treasure those photos. Juan's got a kind of a estate farm up high, and just insane weather. We can sit there and cook sausages on the grill, Juan. How about that?
Absolutely.
Okay, so Apple, is this thing kind of forming a little consolidation thing to move higher, or is it, what's your thoughts here?
I will short. I think Apple is a 108 target short. I'll be shorting Apple. Probably if it breaks above 130, 113, right now it's trading 112, pre-market 112.60. But my guess is 108. I'll be trying to short this thing 108. But the major trend, the weekly is very bullish still. But I think we need a retracement. Weekly is very bullish, but I think we need a retracement, and probably 108 is the place where I'll be buying that thing again.
Okay.
But weekly's pretty bullish, but I'm not sure that today's the day to buy that thing.
And guys, the reason Juan's kind of picking that 108 area, we got a little bit of a collection area between 108, 109, 110. It may pierce that support on the weekly at 110.23. So you got to, this is kind of more of a long-term play that he's speaking of. How about Tesla? Every once in a while,
Tesla, Netflix is another one that I want you to take a look at, because if Disney there's a rumor.
Let's take a look at Netflix first. Let's take a look at Netflix first.
Disney is there's a rumor. I don't know if it's true or not, but that Disney is about to buy Netflix. So that thing smoked yesterday. It went up like crazy.
Yeah, I got kind of reversed out of that trade above 96.18. I just kind of liked the way it was not cooperating, long term with the market. But again, the profile's kind of I mean, yeah, this runaway thing, it started happening last week, and the profiles one really just kind of keep me from doing stupid things, really. I mean, to put it
Exactly.
bluntly.
Exactly.
And getting outside there, it's okay to be long, not okay to be short on the long term. And look what happened. I mean, trying to, play around with things after they blow through resistance is it's not a smart thing a lot of times. Do you think this thing's got a chance to go even higher, or what are your?
That's my, but I don't know. I will not touch it right now. Probably
Right.
the end was yesterday, but today I'll be very careful. But I have this on my radar because I don't know, something's going on with this stock. Netflix is very attractive for Disney. Is a very convenient. It will add a lot of value to Disney's business model,
Right.
and it makes a lot of sense for Disney to buy Netflix. They don't have streaming services, and that's the future. I mean, it's the present actually. So Disney it'll be a perfect fit for them.
True. Tesla.
Tesla.
Every time I read things that Musk says and some of the things he's putting energy towards now, I mean, is he putting enough time and energy into the car company, or does this all fit together with some other things that he's doing long term?
Love the gap, and love that gap. And I think Tesla could go all the way up to 225
Okay.
with a stop. I mean, probably probably a wide stop 203 or 206, 204. But then 225 on the daily might be an area of resistance where there's a collection of bars, a cluster of bars. So that's is one of the things that I'm also looking today very. Yeah, I like Tesla, and I love that gap with volume. Yesterday, trades like 6 million stocks on Tesla. So I like that thing. I think it
Okay.
could go up. But at near 220, it'll have a lot of resistance. 221, it starts to show some resistance. So I'll sell some at 220, and then if it goes all the way to 225, that'll be my final target.
All right. There you have it. On the what else are you looking at? I was going to pull up some stocks, but is anything else on your radar screen as far as stocks or commodities futures? that you wanted to-
Brazil, EWZ.
EWZ. All right. Here we go. Here's the iShares Brazil ETF. So here's the weekly. We kind of crossed the board on the daily. We talked about this the other day on the show, actually, compressing up into this area. Do you think we're due
wrote
another?
about this on the Bloomberg.
I wrote about it. That's right. It's on Bloomberg. You can catch it there. I forgot about that.
It's still going up. I mean, since we called this thing.
Yeah, that's right. That's right. We looked at. Yeah.
Yeah, we
the
called this thing at 27, and it's 34 now. My guess is it'll go all the way to 45.
Got it.
45 is my target for EWZ. Yesterday, it had it is trying to break out on the daily. It's consolidating there on the daily, but if it breaks out, the monthly looks very nice, and it looks ready to continue. It might consolidate for a few more weeks, but this thing, you have to be careful. I mean, be very attentive to what might do in the coming days or weeks.
What's the currency situation there right now? I haven't even looked at it lately in Brazil.
It's pretty much the same. If you look at EWC and you look at the real, the Brazilian real, it's pretty much the same chart.
Let me pull that up.
Yeah.
Where are we at here? What's the symbol on the? What's the cross? It's okay. There.
USD BRL.
Got it. There we are. All right. So let's just kind of take a look at the weekly, the daily here. Not kind of a muted. Let me see if I can get this. There we go. Yeah, I mean, kind of still in the same track it's on, really.
That thing's about to start moving.
Juan, look, thanks for joining us today. I really appreciate it. All right, guys, we'll be right back, and we'll hit some stocks when we get back. Thanks, Juan.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. Just looking at the dollar, kind of got into that POC 96.26 that we talked about, reached a high 96.26 and backed off a little bit here off that mode of the weekly profile. I was just kind of looking at gold. Man, just has come down into this 1296 area and just sat there. You want to see these things kind of get away from it. This is a little concerning for the moment. But again, I think you've got to still be willing to kind of pick battles around those major inflection points. And I'm more longish than shortish on this inflection point. So got to play the numbers game. Stock's still in an uptrend until we kind of are told it's been broken. Or excuse me, the commodity gold, not a stock. Let's take a look at the scanner. What I was looking at before, looked at the Real. Taking a look at that one. I was taking a look at breakdowns. Had a lot of stocks that broke down yesterday. It's wild relative to profiles. And just want to pick out a couple of these. Aflac. Been in an uptrend, starting to kind of slump. That's not the best one in the world. H&R Block. Yeah, this is one I'm really interested in, actually. 2306 is the selling point on that one. I like playing defense against that. Love how it's rallied back up in the bottom of that profile. A couple other stocks that are on this list right now. This is kind of the gift that keeps on giving. CVS breaking down again. Something happened here. Here we go. Another one. Man, these are stocks that have just been getting their butt handed to them lately, and now breaking below profiles again yesterday. Some stocks to keep your eye on there. Stocks that are just not with it. BXP could see 128.93 on this stock. Just to summarize here before we end the show, here's the S&P's kind of spinning around above this 2149, 2150, Teflon coated. Gold at that 1296 area right now is down $17 from yesterday's close an ounce, and I'm taking a shot here with a little bit of a defense plan down below. Crude, the big numbers on crude right now, in my mind, 49.75.50 up top, and 47.90 down below. That's the 240 unfair lows. That's the only inflection points that you've really got to really seriously pay attention to right now. Kind of in no man's land, and don't see a lot of leverage until at least one of those inflection points is hit. The XLF, looked at this the other day, getting down into this is kind of a primer on gold too. I mean, you could have a little bit of a noise area down here around that 1296 on gold, just like the XLF did. Give yourself a little bit of room there. And another ETF we were looking at, the XLU, the utilities. Came down into support and has gone last week and has gone through now. So 48.77 breakdown again on the XLU. What does that tell you on the rate scene? Stay tuned for Larry. You will thoroughly enjoy it. And thank you, Juan Villegas, for coming on today. It was all our pleasure. We'll be back again tomorrow, guys.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.